Hey everyone, and welcome back to another video for today. So let's talk a little bit about the current state of the stock market, some macro stuff as well, touch on some companies that did already report their quarterly figures, and then touch a little bit on Intel and Alphabet as well. They will report their quarterly figures Thursday after the market closes. Of course, we will review both of those companies here on the channel. So if you're new here, hit that subscribe button. We really appreciate that. We're very close to reaching 90,000 subscribers. So if you're new here, hit that button, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so let's start off with a main overview of the current state of the stock market. We have another very green day, especially in the tech space. So Microsoft is up 3%, Google up 2.85%, Meta is up 4.6%, Nvidia up over 5%. We even have Tesla up over 8%. I already have a Tesla earnings review live on the channel. I mean, the quarter was a disaster of a quarter. Stock is up probably because, well, lots of people were betting on the fact that the stock would be down. So now we're up. Some macro related stuff there as well. You might say Doge, the comments on Elon and Doge, that might have positively affected the stock. I did a full review on that, so that would be in the top right corner. Amazon is up 5% as well. We're back above $180. I believe Palantir is, back above $100 here as well. Incredible rebound. And this is what we've been saying for the last couple of days, maybe last 2 weeks or so as well, is that I do believe that the stock market did bottom, and in some cases, some of these stocks have bottomed during that Liberation Day week, right? April 2nd, April 3rd. I think that's where a lot of these stocks have bottomed. Vertiv, for example, Vertiv reported this morning, Wednesday morning. We're going to touch a little bit on that company later in this video. But Vertiv is up 35% since the bottom of that Liberation Day week, or tariff announcement week, shall I say. And if we switch to the weekly performance for all of these companies here, well, plenty of those companies are already green over a week. Of course, if we look at the month performance, then the majority of them are still red, some of them double-digit red. But Tesla, for example, month performance, Tesla is basically flat. It's down 0.27%. So yeah, I do think that yes, there is of course a lot of bearish sentiment still, maybe today a bit less than a couple of days ago. But going into this earnings season, I think, well, we are going to the earnings season with expectations that are much lower than 3 months ago. Touching on some macro related stuff. So Subutrade here on X, great follow by the way. So he laid out the following thing. At least 2 of the past 10 days saw over 96% of S&P 500 stocks advance. What has happened a week later? Well, history tells us these are the times that it happened as well. So yeah, we have here what, around 10 examples or something like that. So a week later, only 40% of the time we went green. 2 weeks later, 50%. So basically anything after 2 weeks, the odds are in our favor. A month later, 2 months later, 3 months, we're all above 70%, sometimes 80, 90%. And even, well, 2 months later here, 100% of the time we ended green. And I mean, look at the average. The average after 2 months, that's already up 7%. If we look at 6 months later, we're up 11%, then 15, 9 months later, and 16.25% up a year later. Now, this is also an interesting thing. So the S&P 500, Wenzweig Bread Trust. Okay, I don't know how you pronounce this, but this is how I will pronounce it. I also didn't know what this was, so here's the definition. It's a technical indicator in the stock market analysis designed to identify strong sustainable uptrends. It measures market breadth by analyzing the ratio of advancing to declining stocks, specifically within a broad market index like the New York Stock Exchange, or in this case, the S&P 500. The indicator is triggered when the percentage of advancing stocks exceed a certain threshold, typically 61.5%, along with other conditions related to the index movement and volume. So we might be experiencing this right now. So here as well, we've got a lot of data points to work with. And here you can see the odds are very much in our favor for all of those periods. 1 week later, 2 weeks, 3 weeks, a month, 2 months, 3 months, 6 months, and a year later, the odds are definitely in our favor. I mean, if we go 12 months out, 100% of the time, we were green and we were up on average 23.78%. Now, of course, I say this right now, but if you've watched my videos, even when the markets were red, I said the same thing time and time again. Well, be fearful when others are greedy and greedy when others are fearful, and why it's always important to stay invested. We've talked about, well, missing the 10 best days, and then, okay, some people say, yeah, but what about missing the 10 worst days? Well, yeah, of course, if you can time those, then congratulations, I'd like to invest with you. But usually, those that miss the 10 best days, it's because they sold out during the 10 worst days, right? The 10 best days usually, not always, come after the 10 worst days. So if you sell out when the market is red and then the next day it's green, well, you've missed out. So remember that the next time. And of course, that's not to say that you cannot take profits, etc., etc. No, that's completely fine. Moving on to some earnings reviews. So of course, Tuesday after the market closed, we had Tesla, Intuitive Surgical, Enphase, SAP, SAP. Then on Wednesday before the market opened, you had Boeing, AT&T, Vertiv. After the market closed, you have IBM, ServiceNow, Chipotle, Lam Research, Texas Instruments, and Las Vegas Sands. On Thursday, before the market opens, it's not that interesting to me. After the market closes, that's definitely very interesting to me. That's Intel and Alphabet. You also have T-Mobile here. So I do want to touch a little bit on Intuitive Surgical because I do like that company. It is definitely not a cheap company, but it's a very, very interesting one. And then we'll touch a little bit on Vertiv as well, and then talk about Intel and Alphabet. All right, so Intuitive Surgical's revenue increased 19.2% year over year last quarter. The majority of the revenue comes from product revenue, and then you have services revenue. Now, over the last couple of years, services revenue has grown at a compound annual growth rate of 13.1%, whereas product has grown at a compound annual growth rate of 11.1%. If we look at the total recurring revenue, that has also increased quite nicely over the last couple of years. CAGR 15.7% since the December quarter of 2019, and it has increased year over year by close to 19%. If we look at the DaVinci Systems installed base, well, that continues to grow very, very nicely. Of course, last quarter that grew by 14.7%, a decrease from the last 2 quarters or so, but still quite nice. And here as well, since the December quarter of 2019, that has grown at a compound annual growth rate of 12.1%. They did give us a couple of, well, comments on the earnings call. So let me remove my beautiful face here. So they touched on the strong procedure growth. Executives highlighted the strong growth in core general surgery in the United States and robust international performance. They touched a little bit on the DaVinci 5 as well. So the launch of DaVinci 5 is progressing well with significant initial placement and positive customer feedback. Over 32,000 procedures have been performed on the DaVinci 5 systems. They saw continued strong momentum in both the robotic-assisted bronchoscopy and the single-port surgery procedures was noted. Regulatory clearance for the robotic-assisted bronchoscopy in Australia and the first provincial charge code in China were achieved. As for the tariffs, the company estimates a 1.7% revenue impact from tariffs in 2025, with roughly half related to US-China trade. This impact is expected to increase each quarter. Now, as for guidance, they said the following: worldwide DaVinci procedure growth forecast raised to 15 to 17% from the previous 13 to 16%. I've talked about Intuitive Surgical in the past. It's one of those companies that sits on my watch list. It's a great company, but has always been expensive. I thought the stock would be down more, but I guess the market really, really likes that company, so it will stay on the watch list. Now moving on to Vertiv. So Vertiv saw revenue for product increase by 30.2%. That's the second consecutive quarter that they're growing over 30% for the product side of things. The other side, the smaller one, is basically, well, has been flat-ish for quite a while, and that's the services and spares revenue. If you look at where they generate the majority of their revenue, well, Americas is of course the biggest part right there. Since December 2022, that has grown at a compound annual growth rate of 16.9%, much faster than Asia Pacific, and of course much faster than Europe, Middle East, and Africa. They of course talked about the tariff situation right now. So they have the current state of affairs and the future state, which actions are already underway, which I mean, the way that they talked about tariff and the situation and the guidance that they gave us, right? They give us here guidance, the high end, the midpoint, and the low end. The fact that they can, well, give us all of these scenarios already right now is pretty impressive. They, of course, give us the explanations here on the right as well. Guidance most likely range of outcomes based upon assumption that tariff rates on April 22nd remain in effect for remainder of 2025. Maintained midpoint of adjusted operating profit guidance consistent with prior guidance, but broadened range to account for uncertainty. So they say less likely downside scenarios driven by countermeasure risk and reinstatement of country-specific reciprocal tariff rates subject to 90-day pause still have manageable floors. So, I mean, I do expect to see more companies give us this type of guidance in the coming weeks, right? Because we are still in the uncertainty part of all of it. So it's pretty impressive. It's very, very good management, to be honest, from Vertiv's management. They also said that they're still seeing quite a lot of demand. So the AI story is far from over, and it's not just the hyperscalers. They talk about neoclouds, they talk about enterprises. So definitely a lot of momentum still with Vertiv and still a lot of momentum in the AI space. And of course, the stock was up quite significantly at the start of the day. I think it was up 14-15% or so. By the time you're watching this video, might be up a little bit less. And then the last two things I want to touch on is, of course, Intel and Google Alphabet. So first up, Intel. We've heard some reports say that Intel might cut another 20% this week of the workforce. Now, what you're seeing here on the screen is the total employees for Intel, AMD, and NVIDIA. Intel at the moment sits at 108,900, which of course is much lower than the peak here in 2022 of 131,900. But still, it's much more than NVIDIA and AMD combined. If you reduce that number here by 20,000, let's say, you would still be much, much higher than AMD and NVIDIA combined. To me, it doesn't make sense. Of course, yes, Intel has Intel Foundry, so you need more employees. Fine. But Intel is so far behind and yet has almost double the amount of employees of NVIDIA and AMD combined. It's incredible. It's incredible. Of course, with Lip Bhutan coming in, I've said it time and time again, more cuts will be made, especially after his last talk. He really touched on the fact that they need to be more as like a startup, doing more with much less. And I think that's also one of the main reasons why he stepped down from Intel's board before, right? I think he wanted to see way more cuts at Intel, and I think Pat just didn't want to hurt his Intel, let's say, that much, and that's where the disagreement came from. That's just my opinion, of course. So tomorrow, the earnings report. The quarter is probably not going to be a good one. We know that guidance was very weak. I expect them to meet their own guidance. Then it's really up to, well, Lip Bhutan during the earnings call to convince us that, well, things are on track. They're not going to tell us much about Intel Foundry because there is a Foundry specific event happening in the next couple of weeks, I believe. So for Intel, well, I'm expecting a meet, and then hopefully guidance is better than expected. Maybe we'll get some commentary on, well, the newer products, 18A, etc., etc. And then as for Alphabet, Google, actually I did a specific video about that as well. I fully expect it to be a double beat and actually quite good guidance as well, especially Google Cloud. On the search side of things, as I've talked about in the other video, I do think that we might see a little bit of weakness there as well. But all in all, I mean, valuation-wise, the price that you're paying for an amazing business like Google, like Alphabet, is in my eyes a no-brainer. So I do expect a strong report, right? I think that's fair to say. Very, very strong numbers for Google Cloud. And then let's see what the commentary is during the earnings call when it comes to, are we still capacity constrained? How do you see the CapEx growth story evolving? Maybe some comments on Waymo as well. I think that can be very, very helpful. So all in all, that's about it. Do share your thoughts down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.